What is up, everybody? It's Ted back here again with some of your favorite financial smart money podcast called Bodies and Wicks. Um, this is going to be a quick update on just Monero, and that's it. Um, Again, going over the three barometers that I go over generally. Bitcoin being one of them. Ethereum being another, and Monero being the third. Monero being my favorite right now is because it has been making me money. Um, Primarily because it kind of has a structure to it. More of a structure than the other ones, I should say. Um, so yeah, we'll take a quick look at it. We'll break it down daily, 4 hour, hourly, and we'll see where we stand. Sorry if I keep looking the other way. I'm looking. I don't have my three monitors here. I just have two. So I'm looking at one to make sure that I'm actually doing the right thing and make sure you guys are looking at the right thing. So, and otherwise, I'll just shut up and I'll go through the intro. All right, enough of that. Anyways, so quick update on Monero. First of all, if you don't know what smart money is, it's basically where the people who have the means and the money that can control the markets do. They're called market makers, right? So they follow an algorithm. There's an algorithm within these charts, believe it or not, and they know how to exploit that algorithm. And I have been taught through private mentorship that kind of algorithm, right? And I'm trying to. It was more in forex and also more in equities indices such as S&P 500 or the Nasdaq or whatever. But I'm bringing it to crypto, and it works out because they all follow the same thing. So. Uh, if that's the kind of thing that you're into and you're open to it, if you've been doing trend lines and triangles and bull flags and bear flags and all that stuff, and it hasn't been working out for you. Because I'll tell you one thing, it didn't work out for me. I tell people this all the time. My first year, I actually went to do my taxes, and I lost $1,000 easily in my first year, trying to trade forex and other ways. Following the standard protocol that you would call retail theory. Once I switched over to smart money theory, I actually started gaining money. So this past year, I actually made money on my taxes, and I had to claim it, which was unfortunate because I had to pay taxes on it. But hey, it's better than to make money in this game than to not make money, right? If that's the kind of thing you're into and you want to listen to more, first, what I like you to do, subscribe to this channel because you'll hear more about it. I'm gonna try to make more quick videos like this. Also, like the video. It's the least you can do is just click that like button if this is something that attracts your interest. And if there's somebody that needs help, and if you need help, if you think this is doing something good, share the video. That's these are three things that you can do that can help people. I kind of understand what's going on in this crazy market, and also understand a new skill that you may have not learned before. So we'll go ahead and jump right into the chart here. Okay, so um, what we have here is the daily, right? This is the daily of Monero. Now, yesterday, uh, it was. Let me see here. What am I doing? Yesterday, it was coming down, right? It just started a new day. So it was up here right around 125, somewhere in this area, or it was just beginning to start a new day, right? So we've passed that. We've been a full day and a little bit more into a new day. So, and I said, uh, during this time, I said there is a redeliver rebalance. If you watch yesterday's video, it's 30-minute video. If you want to, you could just cut to the XMR portion, and you'll hear me say this. And I said, which means this wick right here can be ignored, right? This wick that I have kind of almost underlined here, I say that can be ignored, right? Because what that's going to do is that's going to create an imbalance in between this bearish candle and this other bullish candle here on the 24th. So the 22nd, 24th, there is an imbalance that needs to be filled, right? So it did come down. It did actually go past that low, which I said to ignore. So which means that it did basically apply to those principles. That imbalance that's showing right here in between these two candles, right? Since there's no wick on either side, that huge area right here, I wouldn't say huge, but this big area right here, um, that I have, within this block or within this rectangle, that acts as basically a gap. So if you know anything about gaps, almost all gaps have to be filled. Not all gaps, but generally about 95% gaps are filled, right? So it did come back. It did fill this entire gap, right? And also there is a daily order block. Now, what is an order block? An order block is where you have a bearish candle. This is a bullish order block. A bullish order block is where you have a bearish candle and then a bullish candle, right? That basically comes up and closes above it. Now, I knew that smart money was in the room whenever I saw this daily bearish candle and it had no wick whatsoever. So as soon as it turned 6 o'clock or 7 o'clock or whatever it was, what time it was, wherever you live, whenever it became a new crypto day and it just started going down all of a sudden, that told me that the institutions were in the room forcing this down, trying to get people to sell, right? And they sold along with it, right? So as they dropped a lot of money, they sold a lot of their assets in XMR. A lot of people, and they hedged against it by shorting it, right? And once it got down to a specific point, generally about halfway through the next order block, or less than about halfway through, it generally can't get any more, it can't close more than halfway through the previous order block. All right. And it has to be the body, right? So if we take the body of this order block, right? And the reason this is also a bullish order block is not just because it's one candle, it's two candles, right? So there's two candles and they both up close and they both close above it. So that's what makes this a bullish order block. This wick does not extend lower than this wick, right? If it did, we'd have a completely different scenario. That would be another redeliver rebalance, which is why this right here is a redeliver rebalance, because this wick extends below the close of this, right? So that's why I said, since we had a wick that closed below here, we're looking at a different scenario. We're not looking at something that's possibly going to be going up. We're going to be looking at something that's going to be going down and filling an imbalance. Now, if it would have stayed within this area right here, we could have been looking at possibly it going up further. But instead, it extended up. It extended up into a daily/weekly fair value gap, right? Another fair value gap, which is also an imbalance. So we have created equal highs here on the daily. I don't know if you noticed that or not. You have right here on the 14th of June, going all the way over to right here, which is the 26th of June. So basically a week and a day, pretty much, I think. Um, so that also causes what we call uh, basically a liquidity point, or that is where liquidity will be. Oops, I don't know why I decided to do that instead of actually type in the notes. So this is where liquidity lies. What is liquidity? Well, liquidity is where. Why do you keep doing this? This stupid thing. Liquidity is where most typical traders will have their sell limits or buy stops, right? Because they think if it's going to be a buy stop, they're going to catch a breakout, or a sell limit because they think it's going to go short again. Now, since there's two equal highs, that game is going to play with them once it gets back up there. However, let's not talk about that right now. What we're going to talk about is it coming back down into this imbalance, right? It came down back into the imbalance, fills it up on the daily, right? And then down here, we have a 1 hour breaker and a 4 hour breaker also in the order block. Now, we can probably get rid of the whole breaker situation and just say, hey, it hit the order block. Now that it hit the order block, it's going to come back up. But I do want to talk about the breakers just so you get a sense of what a breaker is and how to prepare for them, right? So, if we're on the 4 hour, right, so your breaker is going to be your last up candle in a low, high, low scenario, right? So, if I was to type this out, low, and let's copy and paste, high, not hive, hive. That's that. I don't even think that's a word. You might be able to look up in the dictionary and it might be a word. I don't know. Actually, let's not even copy that one. Let's copy this one again. Because we're going to be taking this word and all we're going to be doing is adding to it. Lower, low. In a low, high, lower, low scenario, you have a breaker, right? So boom, low, high, lower, low, right? In a 4 hour sense, this would be your breaker, right? So that top of that would be your support, right? However, as it seems, it comes from a 4 hour chart. Whenever it reverses from a 4 hour chart, as you can see right here, there's also a bearish order block. I could probably turn that red, meaning it's going to be rejecting there. So this is where you have an up candle, right? And then you have a bearish candle closing below it. So when you have that happen, that is a bearish order block. So what happens when it comes back up and reaches that point? It gets rejected and it gets pushed back down. Here we had a fair value gap, another 4 hour fair value gap. What's it do? It fills it, and then it fills it, it comes back up, hits the bearish order block, and then goes back down the opposite direction. So now that it's coming back down the opposite direction, what's it looking for? Another imbalance to fill. So that's what price is looking for. Price is looking for two things: imbalances and liquidity. And both can be true at the same time, right? Here, within this imbalance, there's also liquidity. And that liquidity is below these lines right here. Why would I say below these lines? Well, because this is where a lot of people, as you can see right here, if you extend it across, you can see people thought it was going to be going the opposite direction. So it makes a little wick here, pulls back up. A lot of people probably start buying, thinking, okay, that was support. And then it goes back up and rebalances, as you can see. Rebalancing meaning that the wicks touch right there, right? So that's a rebalance, meaning there's no fair value gap, meaning there's no imbalance for it to fill. So it fills it all the way up, comes back down, and then fills the rest of the imbalance. Now, what does it also do? It comes down into the daily bullish order block, which I have marked right here. Right. And also it comes down into right here where there is a volume imbalance. Oops, didn't mean to move that. Volume imbalance means there is no body. Didn't mean to move that again. Jeez, these things need to stop moving. There is no body in between the wicks. So if there's no body in between the wicks, price is going to come down and going to try to find that area and fill it, because that is also an imbalance, right? So that's why I think it came all the way back down into here. It didn't just touch the bullish order block and then bounce back up, because it could easily just touch the daily bullish order block, bounce off, and then come back up. If it does that, it's a very, very strong bullish chart. But instead, we had a volume imbalance just below that. So it comes back down into it and then goes back up. Now, also, even though I had the 4-hour breaker, I forgot to extend it. 4-hour breaker actually goes to the wick. I need to put the magnet on there. So it does come all the way back down into the 4-hour breaker. Just barely touches it. So again, the breakers act as support. It can be the whole breaker though. So it could come all the way down to the very bottom if it wanted to, and then come back up. However, I don't see it coming back all the way back down to the bottom. Why? Because you do have a bullish order block for one, and that would cause it to come more than it would cause it to come down more than 50% of the bullish order block. Generally, that does not happen in a bullish chart. That will not happen. So instead of it coming down, all the way down here, instead this is a more bullish chart, and where it hits the 4-hour breaker and then turns around and comes back. And now we're starting to see more of a bullish style chart action, if you will. There's no more, there is an imbalance just below that though. And that is right here to right here. I don't know if you saw that, but that is a fair value gap. That is a 4-hour fair value gap. So let me put a text on that. 4-hour FVG. Why does it do that? Jesus. FVG. Not FVGT. FVG. Okay. 4-hour fair value gap. Now, let's go back to the daily. And let's see if that 4-hour fair value gap is somewhere near the 50% of the body. Okay, so it's just above it. It's just above that 50% mark of that bullish order block. Meaning price can come back down into this 4-hour fair value gap and fill it before it starts moving up. So that is something I would be on the watch out for if you were trading Monero, especially where it's at right now. It came back down, touched the 4-hour fair value gap. A lot of people could think it's on its way up. However, if we look at this from a different standpoint. Let's take this and maybe not there, but let's go all the way to the top here where there's liquidity. Okay. Oh, why did it move again? Okay. So let's lock this in place. So it did come back down into the 61.8%. That would be where the discount pricing is. And it's still below it, which means that if you're an institution, if you're smart money, you're either loading up or you're waiting for it to come back down. Now, the thing is, and others, you're going to see rectangles all over the place on my charts, because that's all there is rectangles. Why? Because here is another 4-hour fair value gap that it needs to fill. So, in my opinion, whether it's worth much to you or not, I don't know. I see this coming up, possibly breaking up into the 4-hour fair value gap, dropping again back down into this 4-hour fair value gap, even though it'll stay above the 50% of the bullish order block, and then start wiggling its way back out. It may come up to here, drop back down a little bit, and then it'll probably come up to about here, which will be about halfway, drop back down a little bit, fill it up, and then possible consolidation just to make sure this is filled. And then after that, I see a move up. Now, we are very, very early in the week, and that's why I think this is what will happen. I think we will see the drop by Tuesday, Wednesday, right? So you got to think about a weekly formation, right? And how weeks form in a weekly candle, right? So if we look at a weekly formation here, you can see that not only did the previous week not even break the body of the previous week's bullish candle. Well, this is the current week actually, but it hasn't broken the body. And if it comes down to where we think it could, then it still won't even break the body. But right now, it's only about 3/4 of the way through of the weekly candle, right? So we could see this come down here, come back up, and who knows, by the end of the week, we could see this actually be a green weekly candle. That would be great if we did. And what it will be looking to do after that point, since it has filled the fair value gaps down here, a fair value gap down here. Now what it's looking for is a bigger fair value gap. And also, remember on the daily that there was 2 equal highs. That would be liquidity. So first, seeking liquidity. Then second, seeking the imbalance. So that is my thoughts on what could possibly happen with Monero. The other thought that I have is that it could do what it has done, right? And right now, it'd be at the lowest point that it is, just barely touching that 4-hour fair value gap. And then it could just start moving on up now. I don't see a problem with that. I don't see why it wouldn't. But then again, like I said, price likes to seek imbalances and price likes to seek liquidity. It's low enough to an imbalance that it more than likely possibly would come down to this imbalance, this 4-hour fair value gap. And once it's in there, it's already inside the 4-hour breaker, again, acting as support. Probably won't get past more than half of the daily bullish order block and then turn around. So I see all of these things combined together, and this is how I got my analysis out of Monero. So you can, what I have done, I have already started my trade, very, very, very small amount. But I did it once it broke into the 4-hour fair value gap, right? And then I'm waiting to see if it's going to break down into here or if it's going to come in. And this is the 4-hour. Again, we have, wait, I think that was that the daily? I can't remember which one it was. That was, okay, sorry, that was the daily fair value gap. That was right here, right? And then there's also a 4-hour fair value gap that is right here that kind of overlaps the daily. So fair value gaps below, imbalances below, fair value gaps above, imbalances above. That's what price is probably going to be seeking. Which one is it going to seek first? I don't know. If I didn't know, I would be a millionaire, right? So that's why I'm watching this closely, and I have limits set in case it comes down here, right? I wish there was an easy way to say, okay, it's going to go up to this 4-hour one. And my easiest way to say that would be watch out for see these two equal highs on the hour. I would say if it gets above that and closes above that, especially on the hour, maybe 4-hour, if it closes above that on the 4-hour, then I would definitely be looking at more of it coming up into this 4-hour fair value gap. This one's already closed, so I can get rid of this one since it's already closed that fair value gap. And it possibly coming up into this one here. So I'm going to change the color of this really quick because I think this is our target right now. There we go. I think that is our target right now. If not, it's this one down here. Either way, be careful. If you're going to be trading this, again, watch it closely. Set limits. Make sure you're not risking any more. This is what I've been taught. Make sure you're not risking any more than 2%. And make sure anything more than 5% of your total account does not get stop lossed out. Because if that's the case, start small again whenever you start trading again. Put in only a half, like I said, I usually start with about 1.5–3% as my beginning trade of my account, and then hopefully end up with more than that. But if I end up losing a lot, then I'll start with about 0.5%, 0.75% of my account, and I'll keep gradually going up until I've regained what I've lost. By the time I've regained what I've lost, I am back to now generally about 1.5% to about 3% of what I can use as far as my whole account is concerned. So that being said, that will be it for me. Thanks a lot for watching. I wish this was quicker than what it was. It was 30 minutes, longer than I thought it was going to be. But thank you for watching again, and we shall see you again soon.